Trading is changing. Whatever technical signals made you money yesterday may cost you a fortune today. Here's what's happening, and here's how you actually beat the game. Have you ever browsed through your charts just to identify some juicy trading pattern or signal in the making? Perhaps a nicely looking head and shoulders forming with crystal clear perfection. You watch as the price breaks through the neckline and you seize the moment. With a healthy position on the line, you're looking forward to some easy money. That is easy money according to any trading book out there. Textbook stuff. But once your money is live on the market, the pattern turns on you and quickly moves the other way. Does this feel familiar? I'm sure it does. I myself have been tricked in this exact fashion more times than I can count. And I'm sure I'm not the only one. In this episode, we'll discuss how to level with the market, how to actually win as a technical trader. For trading by the book won't get you far, that's for certain. But first, like and subscribe below so that the sun will shine tomorrow. Now, let's get down to business. When I started out myself, all the classical technical knowledge I put into practice bled me dry and left me out to die. I jumped onto every outbreak, longed and short every support and resistance line, and meticulously followed every technique, candle, RSI divergence and whatnot advocated by the renowned trading literature. And what did that gain me? Nothing but pain and piled up losses, and steady ones at that. I felt stupid, for it seemed like nothing I'd learned ever seemed to pay off. Most outbreaks I positioned myself for were false ones, and most new bottoms that I shorted quickly reversed and shot up faster than a heroin addict.
Are you clean right now?
Look at me, duh.
I mainly traded the Swedish stocks index, the OMXS30, with leverage. It was a confusing maze in which I was tricked and punished daily, whilst at the same time trying to decrypt my way out to the other side, the safe side. The winning side. Eventually, the pieces began to come together. Just like a kitten eventually learns that the annoying light from a flashlight cannot be caught, I too learned that the most of the technical knowledge I had accumulated caused me to act on noise and non-knowing rather than on profit-generating signals. I learned the expensive way that new price bottoms in the OMXS30 index, for example, meant absolutely nothing from a textbook technical analysis point of view. Most often, it will make a new high or low and then quickly turn direction, making me barely able to react with my predetermined stop losses. As I've often laid out in previous episodes, the markets are a zero-sum game. Whatever the herd does cannot reward you long term. This principle surely applies to technical analysis too. For when traders use technical analysis, they tend to look for the same things, the same patterns, the same candles, yeah, you get the point, the same everything. For this reason, the easier a signal is to detect, the more traders will try to exploit it simultaneously and the less likely it is to work. For the majority of traders tend to go with every technical signal just because it says so in every single technical analysis book out there, hence pushing any knowing towards non-knowing. I can, for example, not recall the last time I saw a clear head and shoulders pattern actually reach its technical targets. And of all patterns, the blurriest and least detectable ones are the ones with the highest probability of actually working. For this reason, don't be surprised when certain technical indicators, techniques and signals that worked yesterday fail to work today and certainly will fail to work tomorrow. We see it already in a multitude of traded equities where a majority of patterns and signals automatically turn into false ones due to a bunch of traders trying to exploit them in the very same fashion, thus causing them all to lose. This is why learning trading solely through books is one of the most deceitful dreams you can be sold. Most of these books are backed up by mouth-watering but outdated success numbers. For any trading signal that is too simple and too popular, such as a head and shoulders pattern, rather quickly turns into non-knowing and expensive noise. For that reason, the only profitable trading book right now would in theory be one that teaches you how to level with all of the other technicians, one that teaches you how to short a false upwards outbreak or how to long any of the majority of the broken head and shoulders outbreaks. Because very few traders do it, that's why it works. For profiting at the expense of the many is how you make money trading. As a trader, a necessity to become a long-term winner today and especially tomorrow is therefore to know how to level with the herd. Hence, whoever can accurately enough foresee and counter the herd reactions and technical signals applied is at a major advantage. These are the traders who use the non-knowing of the majority to their own benefit. For when everybody else is busying themselves in following the same consensus strategies, these successful traders level with the herd by applying profitable counter strategies to the non-knowing. To learn more about knowing and non-knowing, please watch episode 7, Does Technical Analysis Actually Work? For there will always, albeit within theoretical limits, be new and more advanced strategies to beat the old strategies. Compare this to poker, which is one of few games out there where it's often correct to play incorrectly. This means that situations frequently arise at the player's discretion when the correct move is to go against either the mathematical or strategical consensus.
He's called with Jack high.
Makes a call I wouldn't make.
And he's right.
For poker is dynamic and situational and mostly based on psychological judgment. And in order to consistently win, you cannot do what most others do. Although, just doing something differently won't do you any good either, for many are the roads that lead to hell. No. Whatever counter strategies you apply need to actually beat the competing strategies to begin with. And figuring out the proper counter strategies is a complex business. This is why most moves in a game of high-stakes poker come across as illogical and counterintuitive to any layman. The same applies to trading too. It's just that trading is more complex. Far more so. Profitable technical analysis is a dynamic endeavor where you always need to keep an eye on whatever technical tools and techniques the majority of your opponents use. Because once many enough traders apply certain technical signals, you need to figure out how to come out on top of them, no matter how counterintuitive the strategy to beat them may appear. But here's where it gets really complicated, for once the herd is tuned into the evolution of trading and starts applying the successful counter strategies themselves, you need to figure out counter strategies to the counter strategies. But trading is dynamic and in constant change, and once enough of your competitors apply those too, you need to figure out counter strategies to the counter strategies to the counter strategies. Confusing enough already? Probably so. But that is what leveling is, and that is how you turn non-knowing into an advantage. So what counter strategies can then be applied to come out well ahead of your competing technical traders? There are numerous ways to beat the technical analysis herd, all which have to be figured out at your discretion. But make sure to test them before you actually apply them. Here are some counter strategy examples I personally have learned the hard way. They all stem from the Swedish index OMXS30. As mentioned earlier, often when the price breaks through a new local high or low, the price proceeds a tiny bit just to quickly reverse the other way. This is a daily chart that dates back about 1 year from now. Since then we have seen 9 lower lows that quickly changed the direction and shot up. We have also seen a big head and shoulders false breakout that reversed 30% through and instead shot up as well. These are patterns and behaviors that occur repeatedly in this very equity. One way of turning this non-knowing into our advantage is, for example, to still long or short any new top or bottom with leverage, but to make sure to put very tight stop losses and be quick to hop on the counter direction movements once they occur. In this case, to quickly go long once your short position stop loss has been hit. Another counter strategy relevant to this chart concerns the big clear head and shoulders in the middle. These ones I'd stay away from altogether in terms of shorting any outbreak below the neckline. What I would do, however, is rather to ladder in leveraged long positions once the breakout fails and reverses back above the very same neckline. This would be a strong longing opportunity as very few traders would be taking a long such as this. My stop loss for those longs would be just beneath the neckline, which in turn would be a strong sell signal should it break back through again. The simple moral of this episode is that once your regular technical signals fail you, you need to figure out a way to level with the competition and beat your technical analysis opponents at their own game. This is how you make money using technical analysis in 2019 and 2020. It's not by being another mindless technical consensus trader, but by being one step ahead of everybody who is. Bear in mind that profitable counter strategies do vary from equity to equity. What may work for the Dow Jones may not work for Bitcoin. This is where good analyzing skills and sound judgment come in. This comes down to an array of reasons such as demographics, overall experience, for example if the equity is mainly traded by trading institutions or inexperienced retailers, age, gender, geofinances, etc. that all affect the herd psychology.
Excuse me, it's ma'am. It is ma'am.
For different herds have different needs and benchmarks.
You might think we all look alike, but I like to think I'm different.
Bitcoin, for example, long used to behave according to the technical analysis books, as it was overwhelmingly traded by young, clueless retailers who were often oblivious about technical analysis, but rather driven by herd emotions.
Hey guys, just thought you might want to know, sales aren't up, they're down.
This was a candy shop playground for any decent trader. Then came the CME that opened up the doors to institutional investors, along with a bear market that cooled off the retail hype, whereupon Bitcoin's technical charts were increasingly cluttered with misleading information and noise. Retail technical traders who could not adapt to those changes quickly enough got slaughtered, which is exactly what we've seen, especially within the Bitcoin trader community. God knows I've paid far more for my education than any Harvard student has, and it's probably equipped me better at understanding the markets too. The two best teachers in life are said to be physical pain and losing money. I sure have paid for my education, for patience, shrewdness and fearlessness have together turned me into a potent trader. Of course, I still have much to learn, but you'll have a hard time fooling me with market noise and trickster moves. I prefer to stay ahead of the competition, and if you too want to become a successful trader or market participant, so should you.